To energy issues now, PetroSA is looking for a partner to help finance its Mossel Bay plant, which has been inactive since 2020. The company says its refinery in Mossel Bay could produce fuel for up to 1/3 of all South Africa's cars. PetroSA preferably wants a state-owned or state-supported company with large amounts of oil and money as a future partner. Joining me now on this is Acting PetroSA Chief Operations Officer Sesakho Magadla. Sesakho, thank you for your time. Just tell us why exactly this plant was mothballed in 2020.
Okay, thank you, Erin. I think it's important for us to note in 2020, at that time, there was a lot of change in terms of the crude oil price. It had dropped very low, which made it extremely sub-economical to operate refineries. And we would have seen across the globe a number of refineries were closing down, and there was also less investment in the upstream and the crude production or gas production facilities at that time because of the difficulties in terms of economics. So at the time when PetroSA had to make a difficult decision to suspend production at the PetroSA refinery, it was operating sub-economical, and the throughput rate for the gas that was remaining was also low, which made it difficult because at that time you could not put in additional investment to increase the production rate from the Block 9 field, which is the field just offshore of Mossel Bay.
So you're hoping to get funding and support to get it up and running again. Where did the idea to revive it come from? Was it internal to PetroSA, or were you approached by other parties?
The idea came from PetroSA because even at the time when the difficult decision was taken to suspend production, PetroSA board as well as the shareholder were always instructed to find solutions to get the business back and running to be commercially sustainable. And even in last year, the shareholder then put more pressure, which is the Central Energy Fund, that is also owned by the Department of Mineral Resources and Energy, that we need to speed up the process of finding a solution. Now, from a PetroSA perspective, we had to balance what we have in terms of our resources, our competitive advantage, what the current challenges are within the country, which meant that when we were looking at solutions, a bailout was not necessarily a solution that is available to us, but we do need to find solutions that are commercially sustainable, but that also advance the growth of our country. So from interactions with the shareholder as well as internally, as well as scanning the external environment, we realized that we should be also looking at opportunities of partnerships, whereby we could leverage on partnerships that could assist us in terms of getting the refinery started. So it is really coming from internal in terms of the solution. It does have the support of the shareholder, and it also enjoys the support of cabinet, because the thinking of PetroSA exploring partnerships was taken to the shareholder, which is Central Energy Fund, which was then taken to the ministry, which is the Department of Mineral Resources and Energy, which then worked through the government to make sure that as we go this path, we have support for us to execute.
So in terms of the funding you're looking for, I understand it's a minimum of some $2.5 million US, so around 43 million ZAR, or up to 150 million US. How urgent is it, and have you had any interest so far at the small end of the margin or the big end?
I think we must also put it into context so that people understand the funding that's required. Because PetroSA was producing fuels as well as chemicals by producing from its indigenous offshore resource, which is owned by South Africa, which is at the Block 9, which is about 60 kilometers, between 45 and 60 kilometers off the shore of Mossel Bay, which is the Oteniqua Basin. Those resources are owned by the state, so whatever production that comes out of there is that of a state. So the cost of production, as well as restarting the refinery, when you do not have the feedstock from Block 9, or you want to then supplement the feedstock from Block 9, you can supplement the feedstock from Block 9 with imported condensate, which is also commonly known as light crude. So the idea in terms of starting up on the capital that's required, the capital must balance both the infrastructure, which is the infrastructure in the GTL refinery, which is gas to liquids refinery, which has the gas processing facility, which also has the crude processing facility. That's the money that's required for that infrastructure, as well as for the feedstock that's required, which could be a combination of condensate and gas, or any of the two. But when you get the sweet spot in terms of production when you've got the right balance of both gas and condensate, but you could produce from both. So the range of capital investment that's required really depends on the combination that's required. So for the infrastructure alone, depending on what infrastructure we're talking about, if I'm looking at the subsea infrastructure, which is the infrastructure that is from the wells into the processing plant, which is the FA platform, as well as the FA platform, which is an offshore rig, which is located 46 kilometers from Mossel Bay shore, and then the gas to liquids refinery. I'm looking just for infrastructure at the minimum of about 860 million rands, and then from that would be minimum to get the refinery ongoing. But depending on the change that we make in terms of increasing the capacity, because we know that the refinery has got a nameplate of 46,000 barrels per day. So, and if you only produce condensate and you want to increase condensate, you will make some minor modifications. So the amount of capital that's required to convert to increase that capacity for the infrastructure, that is the range of about 1.5 to 4.3 billion. It just depends on the combination that we take, and the desire for the shareholder as well as for PetroSA is to take the least capital solution that maximizes the utilization of our infrastructure and also increases the long term in terms of production for the refinery. So it just depends on the combination of the ultimate solution that could come. For the gas alone, we had indicated that we already have existing gas that is remaining in Block 9, which we commonly call tail gas. That is estimated at about 100 billion scarfs, and that could enable us to feed and build a power plant to generate power from that gas of about anything between 100 and 180 megawatts, just depending. But now the challenge would be, in terms of the timing for that, is to make sure that the infrastructure, the maintenance of moving away from a mothball, from a 10 down rate to making sure that we have continuous operation, we would have to do a major intervention in terms of maintenance. That is the minimum capital that I had highlighted previously, yes, so that we can extract that gas. But there are a combination of solutions that are available for us.
And I see you say you're willing to hand over equity to a partner or enter into a profit-sharing or contract production deal if that entices potential partners to join with PetroSA. How much equity would you be willing to hand over? What's the limit?
I think what we have been requested for is to seek for partners. The partners are open to submit proposals. The proposals that must be on the table must be mutually beneficial for the two parties, which is PetroSA, as well as whoever then the prospective investor is. But out of evaluating those benefits, we must also make sure that the long-term objective of ensuring sustainable, affordable energy as well as security of supply is not compromised. So those issues would have to be balanced in even when we propose a recommended partner to the government, because ultimately, for an investment of that nature, it would require approval by the ministry as well as approval by National Treasury.
Yes.
So balancing effect of what the investors' interests, what PetroSA interests are, and what the national interests are, perspectives that we would need to balance in selecting the final solution, as well as finding that balance for making sure that the asset or the portion, whatever commercial constructs that's there, is the value adding is maximized during that process. So all those perspectives we will have to balance.
You're not going to show your hand or your cards then in terms of the actual figure for the cap, but Sesakho Magadla, thank you for your time as Acting PetroSA Chief Operations Officer.